So remember that the topic you're looking at is reconstruction. We said that whenever a company is not doing very well, you're making losses, you must always consider this concept of what here, reconstructing the company so that you can put it at a place where it will continue now making what here, profits. Basically, I've got two types of reconstructions. We have what we call internal reconstruction. And the internal reconstruction, normally what we do, we sit down with the capital providers. These capital providers would want to reduce their capital. They would want, or rather we would want them to reduce their capital through negotiations legally, so that our liability towards them reduces. If, for example, it is ordinary shareholders, if it is this internal reconstruction scheme, like ordinary shareholders would want, if a share, the old share price was 10, would want, in this case, this new share price after reconstruction to be like 5 or 6, something in this case here, which is lower. After we clean our books and the share price is low, there are high chances that we can issue now new shares and we shall get so many members of the public now being able to do what you have to afford. The same case with the debenture holders, the same case with preference shareholders. And that is why under internal reconstruction, there is a very important account called capital reduction. Capital reduction, when we reduce these various capital schemes, the various types of capital like that, then we are able to build up a good muscle that we can use, ladies and gentlemen, to do what here, to be in a good financial position, either through borrowing or even going to a bank and telling the bank, you know what, now the risk, our financial gearing has reduced, our debt has reduced. Now give us a loan, So when it is internal, we are all looking at the capital structure. And of course, any other internal negotiations with these internal stakeholders. But when we talk of the external reconstruction, now this company is beyond redemption. Now, basically, this company is being liquidated and its assets and liabilities being taken over by a new company, So you could either create a new company to take over these particular assets and liabilities over this particular company that is in trouble, or we sell it. We are basically acquired. We are acquired by a predator. So today I would want us to look at an external reconstruction question, and I would want us straight away to look at May 2016. I would want us to look at May 2016, question number 3. 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 And remember, it's all about low-hanging fruits. How many marks shall we be able to get within 40 minutes? That's why I call the class low-hanging fruits. It's not about balancing. It's about low-hanging fruits. How do we get to harvest them? How do we get to harvest these low-hanging fruits in a way that we shall be able to do what here pass? What I've seen so many students doing in this paper called Advanced Financial Reporting, whenever they get a question of reconstruction question, you can even do like a write-up of 4 or 5 pages. Meaning that this single question can easily take up your 1.5 hours. If you are not a bright student, if you use 1.5 hours in any single question like this, trust you me, that come next semester, I'll teach you again. AFR is not even for the very bright students. AFR is a paper for those students who know how to harvest low-hanging fruits, because of how the AFR examiner is generous with awarding of marks. Any single entry that is correct, they put tick, 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 tick. So the moment you try looking for perfection in AFR, you take 1.5 hours doing external reconstruction like the question that came last semester. You take another 1 hour doing, in this case here, for example, group consolidation. straight away 2 questions. And remember, in that case, you have not even gotten time to look at the theory parts. You will fail and fail terribly. And then we'll start, in this case, you're blaming everybody except yourself. And yet you are the one who has the biggest problem, who never knew that in financial reporting, time management is the key thing. There is nothing like knowing a lot in financial reporting. It's all about how you manage your time within 40 minutes maximum. Should be 37 actually to be precise per question. But if you exceed maybe 3 minutes, 40 minutes maximum, you should have given this question of yours justice. So are you able to hear me? I can see people complaining there about sound. Are you able to hear me now? Are you able to hear Mwalimu? Are you able to hear Mwalimu? Are you able to hear Mwalimu? Yes. Thank you so much. Now we are communicating. Now, ladies and gentlemen, if I'm the one, for example, who got this kind of a question in an exam, if I'm the one who got this kind of a question in an exam, this question here, this is what I would have done pretty first. So we are doing this question. This is May 2016. May 2016. Question number 3. Is it question number 3 really? Yes, question number 3, yes. So this question number 3, I'll start by reading the requirement. Question number 3, I'll read the requirement. So part A, they want me to give them the relevant ledger accounts to close the books of Hasara Limited. The relevant ledger accounts to close the books of Hasara Limited. Then part B, journal entries to record the relevant transactions in the books of Zawadi Limited. C, statement of financial position of Zawadi Limited as at 1st April 2016. This is where I will start from. The last one, C, question 3C. Question 3C. So I'll come and mention here, statement of financial position of Zawadi Limited. So in this case here, question number 3C. So question number 3C, there I can see very many marks that I'll be able to harvest without knowing anything at all. So question number 3C, we are looking at the statement of financial position of the new company of Zawadi Limited. Talk of Zawadi Limited, Zawadi Limited, Zawadi Limited, Zawadi Limited, statement of financial position as at 1st of April 2016, you underline this, 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 you underline this. So statement of financial position as at that data. Just a moment. Great, great. Great. Okay, so then what do? I will simply come and copy the statement of financial position given. I'm a bright student. I am a bright student. I'll copy this statement of financial position, the one of Hasara Limited, the one that is being acquired, the way it is provided, but without figures. You copy it. As other students are looking at ceiling boards, you already have something you are doing, imagine. So you write there assets. So assets. So assets, I have non-current assets. So I have property, plant, and equipment. Don't write figures. Property, plant, and equipment. I have available for sale financial assets. Available for sale financial assets. I have goodwill. Just copy like that. The way it is. I have preliminary expenses. I just copy everything the way it is first. Then I go to the current assets. So current assets, what do I have? I'm just copying those names the way they are. So under current assets, I have inventory. After inventory, I can see accounts receivable. After accounts receivable, I can see financial assets. 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 After financial assets, I can see total assets. I will not write that. No, it's important. I can just write it. Total assets. From there, now we go to the financing bit where I can see equity and liabilities. So we have here equity and liabilities. Equity and liabilities. Equity and liabilities. What am I able to see there? I'm able to see the ordinary share capital. So I have here share capital. I have share capital. I have share capital. After share capital, I have a preference share capital. Preference share capital. Preference share capital. After preference share capital, I have revaluation reserves. I have revaluation reserves. Revaluation reserves. I'm not writing any figures. Remember, I'm only copying. Revaluation reserves. Then I have revenue reserves. Revenue reserves. Revenue reserves. Revenue reserves. I'm just copying everything. Revenue reserves. And then I have the current liabilities. So I have the current liabilities. I'm only copying everything the way it is given there. So current liabilities, I can see bank overdraft. 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 I can see payables. I can see payables. From there, I'm able to see the current income tax. So I'm able to see the tax there. And then I have the total equity. I have the total equity, and the who? And liabilities, and liabilities, and liabilities, like that. Now, ladies and gentlemen, after I've done that, the moment I've recognized it's an external reconstruction question, this is what I'm told here. Let's even read the question. Hasara Limited, please never ever give your businesses some names. Like when you call your company Hasara, what does it mean? You will never make it. You shall never overcome. Even how you names you call your children, they also matter. Unapata mtu ameita mtoto wake Taabu. Hasara Limited, which has been operating in the telecommunication sector, has been posting successive trading losses. I could not expect any better. Losses throughout because of the name. The directors of the company have made a proposal to reconstruct the company by transferring the entire operations of the company to a new entity. That tells me straight away that this is an external reconstruction. This is an external reconstruction. It's an external reconstruction. So the following statements of financial position relates to Hasara Limited, like that. So I've been able to copy that balance sheet, the whole of it. Now I will start, especially, I know this note where it will help me. This note will be coming in handy to give me the purchase consideration, the one like Zawadi Limited, they gave these particular capital providers, this number of shares. These ones, number 1, 2, and 3, will help me, even number 4, will help me in ascertainment of the purchase consideration. If you look at note number 5, is very important. The current liabilities of Hasara Limited were taken over by Zawadi Limited at book value. So this affects my balance sheet. The current liabilities of Hasara Limited were taken over by Zawadi. So then Zawadi should be able to recognize these current liabilities as they were given in Hasara's books of accounts. And they are here, current liabilities. There are 3 of them. So we have the bank overdraft. I'll simply come and copy the bank overdraft. I'm taking them at book value. I'm taking them at book value. So bank overdraft is 775.8. I have payables, accounts payable there is 1962, and then tax, I have 275.1. So what have I done? I've only followed some simple instruction here as my students, my colleague students here are all of them staring at windows out there. They are staring in this case here at the ceiling. I'm able to pick some things here. Like I've been told that the current liabilities into this new entity called Zawadi, that we shall transfer from Hasara Limited, the current liabilities at book value. That is exactly what you do. That's exactly what you do. I can see so many messages here. Oh, we omitted. Okay, we omitted. Oh, there are things omitted there. Yes, there are things omitted here. Yes, we have non-current liabilities here. Sorry for that. How could I move that? This is what we call Murife, non-current liabilities. Thank you very much. Then we have here the debentures. Thank you so much. We have the debentures. So please let me know whether now you've been able to write up to where I am. Let me know whether we've been able to write up to where Mwalimu is. I just want to show you, like last semester, I could not understand why students were not getting, so many. They were not harvesting so many free of charge marks. How do you fail in AFR? You would rather fail in another paper. AFM, I'll understand, but not AFR. How? AFR, if it's a consolidation, even if I'm not told anything, I'll take the balance sheets given there, start adding them, and I'll end up getting so many marks without knowing even what I'm doing. And then I ensure that I knock on every question, including the theories. So they're saying yes. So we look at the next, we look at the next, we look at the next. We look at the next note. We are told the assets of Asara Limited were taken over by Zawadi Limited at their fair values as follows. So for the assets of Asara Limited, we are not taking them at book value. We are taking them at their market value. And this examiner is generous, and he has always been generous whenever he gives us any reconstruction question. He is that generous. He gives us values to pick really. So you can see property, plant and equipment, 94, 86 point. So PPE, 94, 86.8. 86.8, available for sale, 810. So here you don't pick the book values given in the other books. You are picking the market values here. So available for sale is 810. Then we have the next one we are picking there is inventory, 608.7. Inventory, 608.7. Inventory, 608.7. Then we have accounts receivable, 477. 477.1. 477.1, and then we have financial assets at fair value through P&L. Financial assets at fair value through P&L, 216.4. Now, ladies and gentlemen, do you know what will happen? I would want to bring you to a realization that you can easily pass this paper without even knowing what you are doing. If you look at how CASNEB defines the marks they give, they'll come and you'll see in this case here, them showing like 1, 1, 1, 1, 1, 1, 1, 1, 1, like that. And then they say any 6 marks. And yet you have not done anything to do with what, actually, you can even come here and draw these things for this examiner. Tell this examiner, you can even draw for him these things like that. Yeah, the emojis, right? Of course, we have these marking schemes. You must have seen them saying 1, 1, 1, any 6. And you have not sweated really at all. Nothing you've done there. So then, ladies and gentlemen, at least, and again, I know that there are some also other facts. When you are buying a loss-making company, can you recognize an asset like goodwill in your accounts? You're buying a loss-making company that was in trouble. It's a forced sale. Do you think you shall be able to recognize goodwill which it had? No. Right? So we shall overcome. So then what I'll do, you see now I've reached here. This is the best I could do for this particular thing. I'll just leave it. I'll leave it like this. Now from there, I'll go now to the other parts first of all. If I get time, I will be able to do what you have to fill in these things. But of course, chances are I may not get time. I may not get time again to look at this thing. I'm telling you for sure, you not get time. Because the reconstruction questions, we normally put them there to waste your time. So you can take 1.5 hours. You take 1.5 hours in a question, automatically you become a shareholder at CASNEB. Great. Thank you very much. So now we can start from part 1. Even part 1, there is a shortcut. But what I would want to do, because I'm so sure there are some of you who are doing this thing for the very first time, you will just allow me to start from the beginning to the end now. I follow that procedure. It's you now upon us doing the entire question, it will be upon you now to go and look at what really is a low-hanging fruit to you. What are your low-hanging fruits? And then you follow that. So far, if you want to know that this thing is quite a crazy one, so far, since I started, I've taken how many minutes? 20 minutes, doing out of nothing. That is AFR for you, AFR for you, right? The relevant ledger accounts to close the books of Hasara Limited. Ladies and gentlemen, to close these books of Hasara Limited, the first thing that you need to do, is to do a calculation which captures the purchase consideration. So in this case here, the first working there will be like, I want to close the books, but I would want to know, how much am I going to, am I paid? Am I paid to even think of closing? So then number one, I have to do an account there called a PC, purchase consideration. I'm being purchased, remember. So purchase consideration. So purchase consideration. So purchase consideration. So what are they telling us here? Look at this question, ladies and gentlemen. There is something that I would want you to do me a favor. You guys have your past papers there. When we talk of ordinary share capital shillings 10 per value, can you kindly give me the nose here? Is there someone who can give me the nose, NOS, number of shares? How do we get nose? We normally take the share capital given, 6,000, you divide by per value. Please give me the nose here. The nose here will be 6,000 divided by 10. You can even write it by somewhere. That the number of the existing number of ordinary shares here are 600. Because to get number of ordinary shares, I would want to repeat myself here. To get number of ordinary shares, what we do, you take in this case here the amount provided by the side, you divide it by the par. So like now here we have 6,000 divided by 10. And you normally do that to every instrument provided. Like now I can see an instrument here called 7%, which has a par value, 7% preference share. So it will be 4,000 divided by 10, which gives me 400. Those are the only ones which have par values. Whenever you see par value, it will be very important for you to get number of shares. Very important. So then we look at note number one. Note number one, we go to my purchase consideration. So note number one, I'm told Zawadi Limited issued 3 new ordinary shares of shillings 10 each for every 7% cumulative preference shares in Hasara Limited. So Zawadi Limited issued 3 new ordinary shares of shillings 10 each for every 7% cumulative preference shares in Hasara Limited. So ladies and gentlemen, listen here. We are trying to do a reconstruction. We are trying to negotiate. Like now here, we are trying to talk to our preference shareholders. So we are trying to calculate like how much do we give them. So like now in note number one, we are told this company called Zawadi, the benefactor now, the predator, issued 3 new ordinary shares of shillings 10 each for every 7% cumulative preference shares in Hasara Limited. Very easy for me. So I'll write there purchase consideration. So we start in this case here with the purchase consideration to preference shareholders. To preference shareholders. You underline, and then you say Zawadi is giving them 3 for every 5 preference shares they have. 3 ordinary shares for every 5 preference shares that they have at the moment. So how many preference shares do these guys have? How many preference shares do these guys have? How many preference shares do these guys have? You guys have this thing. Preference shares, you can see it's 4,000 divided by the 10 that I told you. So it's 4,000 divided by 10, which gives me 400. Please remember it is shares, so it has to be in terms of shares, not amount. 400. So in short, when you do it this way, you shall have gotten the number of ordinary shares that Zawadi is issuing to these guys here to relinquish their stake in Hasara Limited. So these are number of shares issued by Zawadi. So in this case here, then what is the market price per share of Zawadi? market price per share of Zawadi. Here there is a coincidence because these shares are basically worth 10, which the examiner wanted, if the examiner wanted to confuse you a little bit, he should have put a different figure. So in this case here, 3 new ordinary shares, each is worth 10 times 10 times 10. So could you be kind enough and then you give me, in this case here, how much? Remember, these are ordinary shares. These are ordinary shares we have given them. These are ordinary shares we are giving preference shareholders. So could you kindly do this? 3/5 times 400 times 10. If I were you for revision, I would have written just nose here. Then I'll be able to follow later. I would have written nose here. So I'm being given a figure of shillings 2,400 here. I'm being given a figure of shillings 2,400. Thank you so much. 2,400. Thank you so much. Now from there, we continue reading the same. Still we are on these preference shareholders. Still we are on these preference shareholders. So we are told here in addition, the 7% cumulative shareholders in Hasara Limited were issued with 2 new 10% preference shares of shillings 10 par value in Zawadi Limited for every 5. So unaandika 2/5. It is 2 new, 2/5. So unaandika 2/5. So 2/5. That's where you start from. We gave them preference shares, and this is the ratio 2 for every 5. 2 for every 5 of the preference shares held. So it is 2 for every 5. So we gave them some other class of preference shares, and we gave them 2 of 5. Remember the number of shares, preference shares outstanding, they are 400. They are 400. So 2 for every 5. So then this gives me the total number of preference shares. And in this particular class, each share again is worth 10. 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 So the preference dividends here. They told us, in addition, the 7% cumulative preference shareholders in Hasara Limited were issued with the 2 10% preference shares of shillings 10 par value in Zawadi for every 5. 7. So the concept here is 10 per value. So times 10 times 10. Which students in this case here are giving me what figure, ladies and gentlemen? They're giving me what figure, ladies and gentlemen? 1600. Thank you very much, Techno. 1600. 1600. 1600. So please don't forget that this is nose, and I showed you how the nose was calculated. Now, after that, we go to note number 2. Note number 2, what are they telling us in note number 2? In note number 2, this is what they're telling us. The preference dividends in Hasara Limited were 3 years in arrears. They were 3 years in arrears. So then could you kindly give me this total preference dividend? The total preference dividend. Remember, this is the preference amount. It's 4,000. It's 4,000, 4,000. And then each year, of course, 7% is the coupon rate of interest. 7%. It's here. 7% is the coupon. So 7% of 4,000, because you're looking at the money. But now remember, that is annual dividend. And they have told us that, ladies and gentlemen, it is 3 years that are what here in arrears. So the total dividend in arrears. Total dividend in arrears. Total dividend arrears. Is there somebody who could be having this figure? Total dividend arrears. Collins that tells me it is 840. This is 840, like that. Then I can continue now reading the question. I can continue now reading the question. I can continue now reading the question. So in this case here, we are told the preference dividends in Hasara Limited were 3 years in arrears. The 7% cumulative preference shareholders in Hasara Limited will accept 3 fully paid ordinary shares of shillings 10 each in Zawadi Limited, and the 20% of 8% debentures limited for every shillings 100. I love this. There are 2 kind of payments we shall be giving them here. For this preference dividend outstanding 3 years, we are going to give them 2 packages, 2 benefits here. The benefits, ladies and gentlemen, are which ones here? We are told the 7% cumulative preference shareholders, the same guys are still getting benefits. The 7% cumulative preference shareholders in Hasara Limited will accept 3 fully paid ordinary shares. So again, we are going to give them ordinary shares. We are going to give them ordinary shares, and we shall give them, if you are keen, we shall give them debentures. We shall give them debentures. We shall give them debentures. Two things, I'll read this again. Two things, that the 7% cumulative preferential holders in Hasara limit will accept 3 fully paid ordinary shares of 10 each and a 20% debentures. And the 20 of 8% what year debentures for every 100. So then we are talking of 3 shares for 100. 3 shares for 100. So ordinary shares, it is 3 shares for shillings 100 here. For shillings 100. And then don't forget that the total outstanding is what here is 840. The total outstanding there is 840. The total outstanding there is 840. Is 840. So these ordinary shares, have they given us the par value of the ordinary shares? Because if it's ordinary shares, there must be par value. Have they given us the par value? Have they given us the par value? Have they given us the par value of ordinary shares? Have they given us the par value of ordinary shares? Have they given us the par value? 10, eh? They're telling me it is 10. It is 10. The ordinary shares, par value is 10. In this 7%, they have told us. In this 7%, they have told us. In this 7%, they have told us. They have told us. They have told us. They have told us. The 7% cumulative preference shareholders in Hasara will accept 3 fully paid ordinary shares of shillings 10 each. So then could you kindly give me this amount? Please give me this amount. So then this one here will amount to what here, somebody? This one here will amount to what here, somebody? 252. 252. And then for debentures, we shall be giving them debentures what? Shillings 20 for every 100 that is outstanding. For every 100 that is outstanding. So shillings 20 for every 100 that is outstanding, right? And how much in this case here do we have which is outstanding? The outstanding dividend is 840. Is 840. So remember, these are not shares. So don't start looking for the par value, not unless you say one debenture and then you say times 2. But the best thing, if you read this, ladies and gentlemen, if you read this, they are telling us, if you read this, they are telling us, and the shillings 20 of 8% debentures for every 100 of preference dividend. So 20, if 100, 20 equals 100. What about 840? What about 840? So then, ladies and gentlemen, this one here will give me how much? Debentures. This one here will give me how much in form of debentures. They're not talking to me now. They're not talking to me now. They're not talking to me now. I don't know why. 168. This gives me 168. Thank you very much. Thank you very much. So then let's now go to another note. This is the head of these preference shareholders. So their purchase consideration, purchasing them off, this is what we'll need to pay them. Don't add. Go to the next note. Go to the next note. So when I go to the next note, what am I told here? Note number 3, the existing 10% debenture holders in Hasara. Now we are dealing with the debenture holders. So you write a title there, to debenture holders. To debenture holders. You write a title there, to debenture holders. To debenture holders. Write a title there, to debenture holders. So now we have here 2 debenture. What are we paying these guys? To debenture holders. So to debenture holders, what we are paying them, we are told here in note number 3, the existing 10% debenture holders in Hasara Limited were issued with 5 fully paid ordinary shares of shillings 10 in 𝐲𝐨𝐮𝐫 Limited, of shillings 10 each in 𝐲𝐨𝐮𝐫 Limited, and the 40 shillings, 40 debentures for every 100. Very easy, really. Very easy, really. Very easy, really. Very, very easy. So, ladies and gentlemen, please listen here. Please listen here. For these ordinary guys, what have we been told? We are going to give them ordinary shares. We are going to give them ordinary shares. We shall give them ordinary shares. We shall give them ordinary shares. And these ordinary shares, what have they told us? I would want to repeat this severally. What they have told us is this: the existing 10% debenture holders in Hasara Limited were issued with 5 fully paid ordinary shares of 10 each for every shillings 100. So 5 shares for every Kenya shillings what here? for debentures worth 100. So please then tell me, what is the total debenture amount outstanding? The total debenture amount outstanding, ukiangalia the total debenture amount outstanding, the total debenture amount outstanding, the total debenture amount outstanding, it's here. It's 4,000. 4,000, shillings 4,000. Total amount outstanding there is shillings 4,000. Shillings 4,000. So these shillings here will be knocking against these shillings, so that in total, I'll be getting number of shares. So then I will need the par value. The par value per share, they have told me, is 10. So in terms of ordinary shares, what worth of ordinary shares are we giving these people? What worth of ordinary shares are we giving these people? What worth of ordinary shares are we giving these people? Could you kindly help me? Kindly help me, kindly help me. What worth of ordinary shares are we giving these people? They're telling me it is 2,000, isn't it? You guys are not really responding as I would really wish, because I'm here to help you. And you will mark these days, these things that I'm putting down here, you will remember. And again, remember, these questions are very, very similar. The moment you get used to this 2 over 5, 2 over 100, 3 over 10, you will be at a very good slate, trust you me. So please concentrate. Concentration is the key here. Concentration is the key here. Now from there, we are also going to give them some debentures, some other class of debentures. Could you kindly give me this figure now out of your own calculation? Out of your own calculation, can somebody in this case here go ahead and give me this figure for debenture? For debenture, we're giving them debentures in note number 3. We're giving them debentures, remember. We've been told here 10 each, and the shillings 40 of 8% debentures for every 100. So could you kindly give me this figure? We see for debentures, how much of debenture worth are we giving these guys, the same debenture holders? We are bargaining with them. Please give me a figure. I want to see whether you guys are really having this thing getting nailed now to your memory. It's very easy, really, because for debentures, they have given us shillings 40 for every shillings 100. Shillings 40. They have told us it is shillings 40 for every shillings what here 100. So times the amount of debentures outstanding. And the other guys who have told me that the outstanding amount is 4,000. So you can see here, these are shillings. Right? You can't tell me times par value, which par value. You see, this and this will cancel out. The final answer I'll get will be in form of shillings. So I'm good to go. I'm good to go. So how much are they giving me, somebody? How much are they giving me, somebody? How much? 1,600. Thank you so much. Although the responses are very few. The responses are very few. Please go to the next note. Please go to the next note. And then now we see whether you'll be able to handle this next note by yourselves. So the next note is note number 4. The ordinary shareholders in Hasara Limited were issued with the 2 new ordinary shares of shillings 10 each in Zawadi Limited for every 5 ordinary shares held. So in this case here, you must give us a title, a new title to ordinary shareholders. To ordinary shareholders. To ordinary shareholders. To ordinary shareholders. So these ordinary shareholders, what are we giving them? From note number 4, the ordinary shareholders in Asara Limited will be given new ordinary. So we're giving them new ordinary shares. We are giving them new ordinary shares. We are giving them new ordinary shares. So if you're giving them new ordinary shares, then I would be interested in knowing, what is the worth of these new ordinary shares from this relationship given here? This is a nice relationship. 2 new ordinary shares for every 5 ordinary shares held. For every 5 ordinary shares held. And if you have done this question with your walimus from wherever you guys are studying, please put those notes far away so that you can get to understand deeper by getting engaged. We're not here to copy and we want to get engaged, want to understand better, want to understand better, want to understand better. Great. Great. 2,400. Muchuku is saying that my speed is too high. My speed is too high. Is that the feeling for everybody that this speed is too high? Is that the feeling for everybody that I should scale it down? Because I thought, my understanding was that you guys have been to someone else's class. But I'm here to show you how to harvest low-hanging fruit. I'm not here really to teach. I'm not here to teach Muchuku. If I start teaching, how many things will we be able to do? How many things will we be able to do? So I'm sorry, if you want, in this case here, to understand this Muchuku thing concept very well, there are videos which you'll purchase. There are videos you'll purchase. There are videos you'll purchase. So for the ordinary shares, they have told us there, as easy to confuse Chris, not unless you have your own phobia, you fear things. This can never confuse you. This is the easiest thing ever, the easiest thing ever, the easiest thing ever. So long as you look at this, because the examiner will always guide you. The examiner will always guide you. What the examiner will tell you, like now here, the examiner is telling you 2 new ordinary shares, so the new must be up. 2 new for every 5. So 2 for 5. So I'll write here 2 for 5. So from there, then I'll come and ask myself, how many ordinary shares are outstanding? I'll go back. I'll go back to my shares. The outstanding share that told you to write the number of ordinary shares, 6,000 divided by 10, 600 shares. And again, if you write this very well, these are shares. These are shares. These 5 are shares. So it means here, these must be shares as well. So that shares and shares will cancel. And then, of course, at the end of the day, we'll get shares. So you'll need the par value per share, which is 10. The par value per share, which is 10. So then could you kindly give me, in this case here, this answer here? Already they have given me an answer. Already they have given me an answer. Great. So we continue here. So what are we getting here? We are getting, what figure are we getting here? For this, ladies and gentlemen, to ordinary shareholders, we are getting 2,400. We are getting 2,400. 2,400. Now, from there, listen to me very well. Listen and ordinary share amount, 600, 6,000. Yes. Now, listen to me very well. Whenever I want to get now the total purchase consideration, I must come here and look at this concept. The total purchase consideration, I must look for these liquidation expenses. What have we been told here about these liquidation expenses? Well, they have told us here, they have told us something very nice about liquidation expenses. The liquidation expenses of Hasara Limited amounted to 30. Remember, our figures are in thousands, amounted to 30. And they were paid for by the new company. If, for example, liquidation costs are paid for by Hasara Limited that is being wound up, then that entry will not find its way to the purchase consideration. But if these liquidation expenses are paid by the predator company that is acquiring, we have assisted this company that is going down meet its own expenditure, then if that is the case, ladies and gentlemen, this particular 30 bob must go to the purchase consideration. So come here and add the last one is liquidation. The last one is liquidation cost, which is 30. Remember, our figures are in form of what here? They're in form of thousands. So you must chop those 3 zeros. So what have I said? That if you see here, it's Zawadi, which is buying Hasara. If Zawadi goes ahead and pays the liquidation cost of Hasara, you see Hasara is supposed to pay for its own cost. It's the one that is being wound up. So if we assist it, then whatever money we pay, we shall put it in the basket of what here? Purchase consideration. And then that is it. So please go and give us the total. Go and give us the total. Please add at beginning. Add zote, mine are not in a column, one column. Give me the total PC. Give me here the total PC, the total purchase consideration. Total purchase consideration. Thank you. 10,450. I'm being given a figure of 10,450. Total. Ukianza kuadd kutoka hapa, oh yeah. Una add kote namna hiyo zote. Sure there. How much are we getting here? Thank you very much, Alicia. If Asara pays, you don't bring it here. You know, this purchase consideration, total purchase consideration represents the figures that we paid. We paid. That Zawadi paid. Zawadi paid. So if it's Asara that he pays, then the liquidation cost will be zero. If Asara paid, the liquidation cost here would have been zero. So when you add now everything, when you add everything, what are we getting? Somebody. Now they are not giving me this 10,450. Most of them are not getting this 10,450. Most of them are not getting this 10,450. 10,450. Fozia got 11 to 90. I don't know how. She got 11 to 90. And I can see another one called Lily getting 11. It's 10,450. Please add very well. Add very well. It's supposed to be 10,450. It's supposed to be 10,450. 10,400. Benjamin is also getting 11 to 90. Where could we be missing something? Is there somebody who could easily show us where the error is coming up here? Maybe it's my board. Anybody who could tell us where this error is coming? Because when you get so many students saying 11 to 90, then there must be a figure. Missing something, Mahali? Missing something. Is it Mwalimu missing really? 840, they have added dividend. 840. Dividend. Why did they add the dividend? Why did they add the dividend? Why did they add the dividend? Don't add the dividend. Don't add dividend. It is 10,450. The correct answer is 10,450. Now, from there, ladies and gentlemen, that is step number 1. Step number 2, give us the purchaser's account. The purchasing company is called Zawadi Company. So go ahead and give us an account here called Zawadi. My whiteboard is very small. Called Zawadi. Call it Zawadi. Zawadi account. So then Zawadi account, what do we have? We have in this case here the total purchase cost, the total purchase consideration. So purchase consideration, bring it here. Purchase consideration. Purchase consideration. So this purchase consideration, Shigana, it is 10,450. 10,450. This purchase consideration, now you have to explain it from this. The purchase consideration, ladies and gentlemen. The purchase consideration, ladies and gentlemen. You will come here, ladies and gentlemen, purchase consideration, start with the ordinary share capital. Ordinary share capital. So then the ordinary share capital, you count all the ordinary share capital amounts. I can see ordinary share capital here 2,400. I can see ordinary share capital here 252. Ordinary share capital. I can see ordinary share capital here 2,000. I can see ordinary share capital here 2,400. 2,400. You add them up, all of them, all of them, all of them. So ordinary share capital, I wish my board was big enough. I can see the ordinary share capital of 2,400. I can see ordinary share capital here of 252. 252. I can see ordinary share capital, ordinary share capital, ordinary share capital, ordinary share capital of 2,000. 2,000. I can see ordinary share capital of 2,400. 2,400. Kuja hapa niambie inakuja ngapi yote? Inakuja ngapi yote? 7052. Sasa niulizeni swali. Hii 7052 utaipeleka wapi? Utaipeleka wapi 7052? Kwa ile balance sheet yetu, nakumbuka balance sheet ile hanging. Ile balance sheet hanging kuna mali kuna ordinary share capital. Andika 7052. Aki wafuati. Mnakumbuka Roman 3? Tulikuwa na ordinary, tulikuwa na balance sheet. Tulikuwa na balance sheet. Oh, yeye niko peke yangu lakini I shall overcome. Ile balance sheet unapeleka 7052 mahali pale. 7052. Thank you. 7052 andika hapo. Aya, something else. We have these 10% preference shares. We are trying to account for the whole of this. It's basically a summary account. So preference shares nitafute mahali ziko. Naona 16 ando 1600. Preference shares pale hakuna. Preference shares butire. So 1600. Straight away you take it to the balance sheet. Your statement of financial position, kuna mahali kuna 10%, kuna mahali kuna preference share. Unaweka 1600 pale. 1600 pale. Unaweka 1600 pale. Mukiandika kama umeona mahali iko, kwa umeandika unasema hapo yes. Alafu mimi najua kwa unafuata mfuati. Hiyo ni max inaingia tu, hiyo ni max inaingia tu, hiyo ni max inaingia tu. From there, ladies and gentlemen, we have debentures. So we have debentures, we have debentures, we have debentures, we have debentures. So debentures, tafuta mahali debenture iko. Kama hapa debenture, ndio hii debenture 168. Debenture kuna 1600 hapa. Debenture hakuna ingine, debenture ni hizo mbili. So tuko na 168 plus 168 plus 1600. So then this gives us what here? 168 plus 1768. So if you look at your balance sheet, statement of financial, the one that we started by drawing at first, it has that 1768 somewhere. Or rather, you take this 1768, it has the debenture somewhere, which is blank. You take that 1768 there. Uwekelea hapo. Uwekelea hapo. Kutoka hapo, katika hii working zote, kuna kitu hatujaweka, kuna liquidation expenses. This automatically will go to the bank. So bank. So bank in this case here, bank. So we have bank there, 30. Bank 30. This liquidation. This account is supposed to be self-balancing, remember. All these entries which are here in the purchase consideration, they must come here. Ebu jaribu kuona kama inaingiana, is it self-balancing? Oh yeah. Is this going to add to 10,450? Is it self-balancing? Is it self-balancing ama iko shida? Is it self-balancing? It has to where? It has to. I'm being told it has to. It has to. Great. Thank you very much. So then this bank, remember, we assisted this small company called who? This small company called who? This small company called Asara, which never had any money. So then because it only has bank overdraft, you took its bank overdraft. You took its bank over. It's like you gave them a loan again. You added them something. So please go to the bank overdraft. The bank overdraft, if you remember the bank overdraft in your balance sheet, the bank overdraft, if you remember the bank overdraft that you took, the bank overdraft that you took, the bank overdraft that you took, the bank overdraft that you took there, the bank overdraft which you took, if you remember the bank overdraft that you took from, it was 775.8. So you treat this amount that you paid for them for liquidation as a temporary loan. So please add 30 to this. Add 30 to this. So if you add 30 to this, then I expect your bank overdraft to read 775.8 plus 30, which will give me 805.8. Quite simple. It's very simple, but I'm so sure some of you are really suffering. But because you chose to hang on, I want to believe you are still following. I want to believe you are still following. So are we together up to there? Are we together up to there? I can see, repeat that again. You need to remember there is an overdraft. This company, Asara Limited, has 775 something as an overdraft. It could not even pay for its own expenses. Ideally, they should have paid for themselves. Ideally, they should have gone to a bank and maybe this bank given them some other facility, overdraft facility. But because we paid for them, then we must go. You know these figures, if you want your final balance sheet to balance, these figures, all of them must find their way to your balance sheet. So even this bank must find its way to the balance sheet, right? It's supposed to be a deduction. If, for example, Zawadi Limited, if Zawadi Limited had some bank money, like say 300, bank balance, which we took, if we took it ourselves, then I would have gone to that bank balance and said 300 minus 30. But you see, it doesn't have any money. It only has an overdraft. So what I'm going to do is to add the problems onto problems. So I'll take the overdraft that they have there, which is supposed to be a negative bank balance, minus that 30. The better way is the bank overdraft the way it is plus that 30, like that. There's not much time to explain a lot. Not much time to explain a lot. So from there now we close the members' accounts. Because now the owners' accounts, now these guys are no longer going to be owners. Now we need to close them up. We need to close them up. How I wish I had a big board, but I'm going to work with what I have. So we start in this case here with the ordinary sundry members account. So we must close the ordinary members account. We close preference shareholders account. We close the debentures account. We close those three accounts. We must close them up. We must close them up. So we start with ordinary shareholders account. If you wish, you can call them ordinary sundry members. Just call them ordinary shareholders account. Ordinary, we are closing them up because now they are not going to be owners of who? The old company anymore. So ordinary shareholders account. So it's a T account. So we start from their current position. We start from balance brought down. So is there anybody who can see the balance brought down of these ordinary shareholders? Balance brought down of the ordinary shareholders. Balance brought down of the ordinary shareholders. 6,000, isn't it? 6,000, thank you very much. So the ordinary shareholders, 6,000, thank you very much. 6,000, thank you very much. But remember, they are not going home just like that. They have gotten something from Zawadi Limited. Zawadi has given them something. You can see here to ordinary shareholders. To ordinary shareholders, they have gotten something. So you say here from Zawadi. From Zawadi. From Zawadi, they got some ordinary shares. They got some ordinary shares worth how much? Zawadi gave them something, which of course should go towards reducing their balance here. 7052, sure? No. No. I know what you guys are saying. You know, some of these 7052 went to the preference shareholders. So we are looking at ordinary shareholders. Ordinary here to ordinary shareholders. The ordinary shareholders here only got 2,400. Thank you very much. Ordinary shareholders got 2,400. To ordinary shareholders. That's the only thing they got. Some of the ordinary shares went to debenture holders. We shall be handling them when we go to these classes. This went to preference shareholders. Now here we are looking at ordinary shareholders. Ordinary shareholders. From there, ladies and gentlemen, there are those assets that were not taken by the new company. The hot air assets, the fake assets. You give them. Ordinary members will always be given the hot air assets. Like they are the ones who are carrying a loss-making company. They were carrying goodwill. So you have given them, this is genuine from Zawadi Limited, genuine, they got. But again, you're going to give them hot air assets. Those assets which are very bad, which were not taken over by Zawadi, by the new company. Like which assets were not taken over? Is there somebody who is able to identify them very fast? You can even tell. There are hot air assets. Who would want to take those hot air assets? Useless assets. You'll be able to tell. You see here we are told the assets of Asara Limited were taken over by Zawadi. These are the assets taken, property, plant, available inventory. So, and then you go to the assets here, which are here, the assets here. Which assets were not taken over? Which assets were not taken over? The useless assets, the useless assets, the useless assets, the useless assets. Goodwill, thank you very much. Goodwill, preliminary expenses. So we have here goodwill. Goodwill. So goodwill of how much? Goodwill of 120. They are the capitalized preliminary expenses. They are the capitalized preliminary expenses. They are the capitalized preliminary expenses. Wakufe nayo. There is another fake asset that very few students will always remember. There is another fake asset that very few students will always remember. There is another fake asset that students will always forget. There's another fake asset that the students will always forget. If you remember, whenever you used to do, in this case here, those T accounts, balance sheet in T accounts, every time we made a loss, losses were always grouped together with assets. If you remember, losses were going to the asset section. That's why we normally talk over crediting P&L or something like that. But remember that losses, ladies and gentlemen, are normally categorized under what year? It's like your asset. It's a bad asset. It's a bad asset. Or if you take it to the equity, it will be captured as a negative reserve. A negative reserve. If I were you, I would always remember this is a struggling company. A struggling company must be having losses. The losses must be given to the ordinary shareholders. So come here and give us accumulated losses. Give us here accumulated losses. They must bear the burden. I mean, you are the shareholder. You must bear this burden. You are the shareholder. So the losses, is there somebody who can see these losses? Is there anybody who can see these losses? They will either be grouped here in form of assets, or if you go to the equity, you'll be able to see them here. Like now they're here. Revenue reserves. They are negative reserves. They're also called accumulated losses, remember. 38, 22.7. 38, 38, 38, 22.7. 38, 22.7. 38, 22.7. Now from there, ladies and gentlemen, also remember that if there is any reserve which Zawadi never bought, that reserve shall be given to the ordinary. Any other reserve not bought by Zawadi here will be given to who? Their owners. And their owners are like now this revaluation reserve. It's a positive one, so credit. Revaluation reserve 400.8. So revaluation reserve. Revaluation reserve. So revaluation reserve is 400.8. So please go ahead and close this account. That is it. Close the account. Close the account. Go ahead and close the account. Go ahead and close the account. Which side is bigger? 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 Close the account. My figures are very small. Please bear with me. It's my whiteboard, which is looking that crazily. So you can add this and this and this. I think this side is bigger. I think this side is bigger. So if this side is bigger, what is the total? 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 Great. 6340.5. 6340. Oh, revenue reserve is minus 3822 point. But you see, when you call it a loss, you can't put a negative. When you call it a loss, you can't put a negative. Like now you can say that 𝐀𝐏𝐬𝐸 has made 6330, 64, 6430, 6430.5. So 6430.5. So the balancing figure is 29.7. If you take this minus this minus this, 29.7. So this 29.7 is what we are realizing from these people. So this is the gain or whatever. So you take it to the realization account. Realization account. We take it to the realization account. We take it to the realization account. Like that. That account is closed. So do we continue, or I'm becoming too much? You know, I should not become too much when you guys are near your exams. Should I continue, or because I know we have really taken a lot of time. I thought I would do it in a shorter time. Oh, we continue. So you are following, right? Great, great. We are good. Thank you very much. Let's continue then. Let's continue then. Let's continue then. So let's continue then. So now we've been able to close the this this guy called who? Ordinary shareholders. So go ahead and close the other capital providers. Let's close the other capital providers as well. So the other capital provider that I would want to close here is known as a preference shareholders. Preference shareholders. So you guys, you have these accounts. Later on, I would want these figures like this one. Like this one, I would want it. My board is very small, but I shall overcome. I shall overcome. I shall overcome. I shall overcome. So mention there to preference shareholders. Preference shareholders. Preference shareholders. Preference shareholders. You guys will be giving me these figures. Let me just delete them. Great. Preference shareholders. And then we close the debenture shareholders. Then we will be left with journals and the realization account alone. Great. Great. So then we have here our debentures. Not debentures, preference. Preference shareholders. Shareholders account. So please come here and give me the balance brought down from the preference shareholders to Qn.3. Great. So from the preference shareholders, what do we have? From the preference shareholders, what do we have? Somebody here. From the preference shareholders, what do we have here? 4,000, right? Balance brought down is 4,000. So in this case here, they are not going home empty-handed. Don't tell me to realize the entire, no, they're not going home empty-handed. They are getting something from, Zawadi. What are they getting from Zawadi? Is there somebody who can just go to what was being given to the preference shareholders and you add up everything? Somewhere there, the one that I rubbed here, I can see preference shareholders who are getting 2,400 somewhere. They were getting 1,600 somewhere. They were getting 252 somewhere. They were getting 162. They were getting 162 somewhere. If you look at the account that I did up there, preference shareholders were getting something like that. Account here to preference shareholders were getting those 4 items. They were getting those 4 items. So I'm being given 4420. Lakini kwanza niwaulizeni swali, mumeona mahali hizi zimetoka? Mumeona mahali zimetoka? 168, not 162. 168. Yes, you're right. 168. You're right. Thank you so much. 168. Mumeona mahali zimetoka kweli? Mumeona mahali hizi figures zimetoka? Please, why for yes? Why for yes? Umeona hizo figures mahali zimetoka? Pale nimesema 2 preference shareholders. Thank you so much. So 4420. And again, remember that these preference shareholders, they were not being paid. They have some accumulated dividends. It has to go to their account. So we have here preference dividends. So preference dividends of how much? Is there somebody who is able to remember 840? Is there somebody who is able to remember 840? Dividend in arrears, yes. Dividend in arrears, yes. In arrears. 840. So I hope they're able to remember that. Then come and give me the balancing figure. Give me the balancing figure so that we can talk of what here a realization account. Then this will be 4840. 4840, 4840, 4840, 4840, 4840, 4840. So then 4840 minus 4420 gives me how much? $420. So 420 will go to the realization, account. But also remember that this figure of 840 as well will go to the realization account as a debit entry. Why is it going to the realization account? Remember, at the end of the day, the figure was paid up and it was taken over by who? By Zawadi. Right? They realized this amount was realized by these preference shareholders at the end of the day. So you're taking from this account, you're taking 2 figures to the realization account. Just for purposes of remembrance in future, right there, realization account, leave it like that. Tuende kwa ya mwisho, which is debentures. Debentures. Tuende kwa ya mwisho, which is debentures. Debentures. Debentures account. Debentures account. Debentures account. So the debentures account, ladies and gentlemen, are you able to see the balance brought forward? Are you able to see the balance brought forward? Debentures account. Debentures account. Are you able to see the balance brought forward? Balance brought forward. Balance brought forward. 4,000, right? Balance brought forward for the debentures is 4,000. 4,000. 4,000. So balance brought down is 4,000. After I capture the balance brought down of 4,000, ladies and gentlemen, then I will be able to look at how will this be impacted. Remember, they're not going to lose everything. These guys got something from Zawadi. From Zawadi. They got something from Zawadi. So is there somebody who can go to the debentures, debenture holders, and tell us which amount they received from Zawadi? From my calculations, I can see they received 2,000 from Zawadi, some figure of 2,000 and 1,600, which gives me a total of 3,600. Is that correct? Debenture holders, is that correct? Is that correct? Thank you so much. Nyaboke, I can see that. 3,600. So debenture holders are mambo mengi. Unless uambiwe kwamba kuna accrued interest on the account, nothing much. So go ahead and realize this. So 4,000, 4,000. Realization account. So give us the realization account here for debentures. 400. 400. So are we together up to there? 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 Great. 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 Thank you so much. Thank you so much. Now from there, in this particular question, there is no good reason for you to do a cash book, to do a bank account, because of course, we know that Hasara never had any bank balance brought forward. Nothing really. So whatever adjustments that are there, I'll be able to do to the realization account straight out. So go ahead and write our second last working realization account. I hope they still have some energy. I hope they still have some energy. Realization account, yes. It can take you more than an hour. Realization account. So realization account is one of those things that are very simple. What you do, you transfer all the assets from the Hasara books and liabilities from the Hasara books at book value, not at market value, at book value. You transfer all of them here. The ones that, of course, were taken up. The assets which were taken up. The assets that were taken up, you transfer them from Hasara's books to realization account at book value. At book value. So unakuja hapa straight away. This is a free mark thing. Very useless thing. So unakumbuka kwa hizi assets zote, zile assets tu kuchukua ni goodwill na preliminary. Hizi tulichukua zote. So unazikopi tu vile ziko. Assets you debit them. So unaanza na PPE. PPE unazikopi hivyo tu. Tuko na available for sale. Available for sale. Tuko na inventories. Hizi low hanging fruits. Tuko na receivables. Tuko na receivables. Tuko na financial assets. Financial assets. Financial assets. Financial assets. Tuko na financial assets. Yes, I think that is the last one. Alafu unaenda kwa kwanza tulipatia time kidogo mkopi hizo Kumbuka hizo unazichukua at book value, not at market value. Like PPE, it is 10, 9, 3 marks really. 10, 9, 57.4. We have available for sale is 647. We have inventories down there. It is 872, 872.5. we have accounts receivable 689.9. Then we have financial assets 216.4. So you book them, you take them at book value. You take them at book value. You take them at book value. Ah, thank you, Pius. I thought the guys were complaining. There is somebody seeing talent there. Thank you very much. So don't forget that we are picking these assets and liabilities from the company that is being closed at book value. So don't forget, it's book value. Remember the liabilities, all of them were taken. The liabilities, current liabilities, all of them were taken up. Remember, we are told current liabilities were taken up. Current liabilities were taken up. Current liabilities were taken up. They told us in note number 4. Note number 5, current liabilities of Asara Limited were taken over. So go to the current liabilities and take them exactly the way they are. Start with bank overdraft. That's a current liability. So we have here bank overdraft. We have bank OD. So bank OD, what do we have there? 775.8. That's bank OD. We have a payable 1962. The year was born, 1962. That's payable. From there, we have tax, which is current. We have tax, which is current. That is 275.1. 275.1. 275.1. 275.1. Let me know, ladies and gentlemen, whether you've been able to write up to here. Let me know whether you've been able to write up to here. Ukiangalia marking scheme ya cash name, hata nikienda kwa exam nipate nimeshindwa kabisa chochote, nitachora balance sheet, nitachora realization account. Nitapata to mark tap free, tap. And then now straight away they'll give me a pass in AFR. Once they give me a pass in AFR, people outside there, they'll be calling me a CPK. They'll think I knew a lot of accounting. It's only myself who knows that for sure. This paper, I passed this paper through what year? Just a fluking. But at the end of the day, it is the end which justifies the means, so long as you passed, right? It's all about, like now, after I finish doing the whole question, I'll tell you the things that you should not be doing. I'll tell you the things that, the steps which you should skip, because I don't want you to go and get 20 over 20 in this question, no. If you go for 20 over 20, you will fail the entire paper. You'll fail the entire paper. So that 30 cannot come Beatrice here, cannot come here. Here we are taking everything from book value as it appears in the books of what year? Asara. As it appears in the books of Asara. Now, there are those accounts that we closed. There are those accounts that we closed, which had some items which are supposed to be taken to the realization account. Realization account. If you remember, we had ordinary sundry members, ordinary shareholders. Do you remember ordinary shareholders? We had 29.7. Great. Wamesahau 29.7. Remember there, it was credit. There, it was credit. Here, I shall debit. So I'll come and talk of ordinary shareholders. Ordinary shareholders. Ordinary shareholders. That there, it was credit. Here, I'm debiting. Thank you very much. How about preference shareholders? It was debit. Preference shareholders. Preference shareholders. Preference shareholders. How much? Preference shareholders. How I wish you guys were giving me figures for me to be able to know whether I should increase my speed. 420, right? 420. Remember, it was debit on that account. Here, I'm realizing it on the credit. Preference shareholder, I'm realizing it on the credit. And then we have, ladies and gentlemen, debentures. So debentures. How much for debentures? 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 400 credit, 400 credit. Now remember, we have something that so many of us forget. In the realization, all of these things, of course, there must be purchase consideration. Thank you, Jacqueline. There is purchase consideration, yes. There is purchase consideration. Is there somebody who can remind us what the purchase consideration was? Is there somebody who can remind us what the purchase consideration was? Purchase consideration, yes. Purchase consideration, yes. Purchase consideration, yes. Purchase consideration, yes. Purchase consideration, 10 for 50, isn't it? This must always be credited like that. And then remember that these people went ahead and paid for us. They paid for us the accumulated dividend, if you remember. So accumulated dividend, they paid for us accumulated dividend. How much was it? Accumulated dividend, how much was it? 840. Is there any other thing that these guys helped us pay? Is there any other thing that they helped us pay? Any other thing that they helped us pay? Preliminary expenses, no. Liquidation. They helped us pay the liquidation. They helped us pay the liquidation here. So give us liquidation. Give us liquidation of 30. Give us liquidation of 30. Liquidation of 30. Hii account wachana nayo kwanza hivyo usifunge. Wachana nayo hivyo usifunge. Wachana nayo hivyo usifunge. There are things which you guys have raised there, which I'll be bringing on later, like usifunge. Lakini hapo utapata mark mingi sana. Usifunge. Wachana nayo namna hiyo. I wish my board was a bit bigger. I need to get a bigger board. Or I need to improve my handwriting. I think it's my handwriting, which is very bad, but I shall overcome. Somebody told me sometime that when you have a very bad handwriting, that is a sign of being a bright person. Great. Now from there, ladies and gentlemen, so nitaivuta, lakini mtanikumbusha baadaye, lakini nitaivuta sababu ya size of my board. Now, ladies and gentlemen, now we go to the last thing now. So the last thing that we have are the journal entries. The journal entries now. So we go to the journal entries. Journal entries, this I'll take 1 minute. Journal entries, I will take 1 minute. Journal entries, I will take 1 minute. Journal entries. So the first one I'll I'll do the journal entry, which will capture the assets taken over. For assets taken over. Whenever you take over assets, you debit. So are you able to see those assets which were taken over? Are you able to see those assets which were taken over? Are you able to see those assets which were taken over here? You debit. So unasema debit, property, plant and equipment with the market values. 94, 86.8. We have available for sale, 810. Then we have, ladies and gentlemen, inventories. So inventory, how much? We have a 608.7, 608.7, that is608.7, And then we have accounts receivable. I'm able to see 477.1. After accounts receivable, I'm able to see another asset there called fair value through profit and loss. So in this case here, fair value through profit and loss, which is giving me 216.4. Those are the only assets that we took for sure, and we are debiting the accounts. And then the total value will be credited to a special account that we shall open, known as business purchase. Business purchase account credit. So is there somebody who can add for us those 4 items? Atupatie na kuja ngapi? Ukiadd zote, what are we getting? Is it 4? Ona kama hii journal entries, I can even start with these journal entries because they are free marks. So number 1159. So this 1159 is the total here. Total 1159. Hapo umedunga mark zako, unaelekea kanani, unaelekea kupita 1159. You see, they had a question just for journal entries. Actually, the way I would have done, I'll give you the secret later. I would have started with the balance sheet, and then I got the journal entries. I passed the journal entries because they're really very easy. journal entries. So that is number one, with the for the assets taken over. Number two, for liabilities taken over, you can do a narration here. You can use your mother tongue here. This is to record assets taken over. To record assets taken over. Every journal entry must have a narration to record assets taken over by Zawadi Limited. And then if you allow me, I will wrap this. I go to number two, and then we record the liabilities taken over. Liabilities taken over. Liabilities taken over. So number two, for liabilities taken over. For liabilities taken over, we shall debit. Of course, we know that liabilities are to be credited. So liabilities, I'm going to credit, like that. So I look for the liabilities, in this case here, taken over. The liabilities taken over are here. The liabilities taken over are here. These three, the three there. So the first one is the bank overdraft. So we have here bank OD, bank overdraft of 775.8. 775.8. Then we have the payable of 775. No. Payable of 1962, the year that I was born. And then we have, in this case here, the last one there is the current income tax. So the taxi of 275.1. There are only three. So could you kindly then give me the total? Could you kindly then give me the total? Could you kindly then give me the total? Could you kindly give me the total? Could you kindly give me that? They're not even giving me the total. They are not giving me the total. They are not giving me the total. I don't understand why. I don't understand why. 1312.9. So remember, this one here will be taken to business purchase account. Business purchase account, which in this case I'm being told is 3012.9. 3012.9. 3012.9. 3012.9. Now from there, number three, of course, here you'll mention there, this is to record liabilities taken over by Zawadi Limited. 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 Great. Now, after that, ladies and gentlemen, the purchase consideration. Purchase consideration. Purchase consideration. Purchase consideration. So purchase consideration, the purchase consideration, the purchase consideration. So for purchase consideration, what do we have here? Purchase consideration. So purchase consideration, purchase consideration, purchase consideration, purchase consideration. So then for purchase consideration, ladies and gentlemen, for purchase consideration, so we have here purchase, this is number three. The purchase consideration of 10,450. Do you remember this purchase consideration of 10,450? Oh, yeah. Is there anybody who is able to remember this 10,450 purchase consideration? They must have forgotten it. 10,450. Thank you very much. So this one, of course, will come and debit the business purchase account, business purchase account with it, 10,450, 10,450, and then you credit Zawadi. You credit Zawadi Limited. You credit Zawadi. No, not Zawadi. You credit Asara. Asara Limited. Asara Limited, which is the selling company. The company which is being sold. So 10,450, like that. And then now you come and do the second last journal. The second last journal is, or rather the last one, is for goodwill. Goodwill. But remember, before you do the goodwill, then you will need to open a business purchase account. So we have here business purchase account, purchase account. This business purchase account, you've told us to debit it with purchase consideration. So we have here purchase consideration of 10,450. Now, ladies and gentlemen, remember, you've told me to take two things to the purchase consideration. When you acquired assets, you debited the purchase consideration. No, you credited. When you not purchased, for the assets taken over, I can see debit PPE, debit AFS, debit inventory, and then credit lastly, purchase, business purchase, 11,599. So in this case here, we have here with assets. Assets taken, 11,599. And then liabilities, when you look at note number 2, liabilities, I can see debit business purchase. So we have here debit business purchase with liability. Liability of how much? Liability of how much? Liability of 1330, 12.9. So the difference figure, the difference here will be what we shall be taking to our books as goodwill. Yeah, 11,599. Nope. Nipatie figure, hii ni ngapi ukiadd? Hii na hii. Ukiadd ni ngapi ya bracadabra? Ukiadd this and this, ukiadd na kuja ngapi? $13,462. 13,462.9. 13,462.9. So 13,462.9. So then could you kindly give me this goodwill amount? Take this minus this. What goodwill are we getting there? What goodwill are we getting there? 1863.9. It was a struggling business, but we ended up paying more, perhaps because we are seeing a future with it. We are seeing a future with it. So then once we have the goodwill, then what do? We shall come and debit goodwill, credit business purchase. So goodwill here is 1863.9. 1863.9. Being a goodwill acquired. A journal for goodwill acquired. A journal for goodwill acquired. A journal for goodwill acquired. So are we still together really? I can see the number has really gone down. The number has really gone down. The number has gone down. The number has gone down. But we shall overcome. 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 Great. So then now we can basically look at our balance sheet. Our balance sheet for Zawadi. Our balance sheet for Zawadi. I think now we have everything. Balance sheet for Zawadi. So for the balance sheet for Zawadi, already we had done it. We had started by doing it. So balance sheet of Zawadi. That is the last requirement. Zawadi Limited. Zawadi Limited. Balance sheet or statement of financial position. So we have here the non-current assets. So we have here the non-current assets. So we have here the non-current assets. Right? So we start with the property, plant, and equipment. So property, plant, and equipment, remember we acquired this PPE with its market value. So those are the figures that we copied, remember. So we have here 94, 86.8. Then we have available for sale. Available for sale, asset 810. And then the last one is the goodwill that we have just computed here, which gives me 1863.9. Then go to the current assets. We already have these figures, remember. So current assets, we have them inventory. We have a figure of 608.7. We have receivables. So already we have this figure, 477.1. We have financial asset at fair value, financial asset at fair value, financial asset at fair value of 216.4. So could you kindly give me these total assets? How much are we getting there? Kindly give me these total assets. Tell me how much are we getting there? Give me these total assets. If you try adding down, how much are we getting there? Total assets, how much are we getting here? Total assets, how much are we getting here? Mm-hmm. 13,462.9. 13,462.9, like that. So from there, we go to the equity. Of course, you guys will continue here, down, because it's supposed to be a vertical format. So for me, I'll come here because of the size of my board. So we have here equity and liabilities. Equity and liabilities. So for equity and liabilities, what do we have? We have ordinary share capital. Could you kindly remind me the figure that we had said you write down? Ordinary share capital. What figure do we have there for ordinary share capital? If you're remembering this, 7052, yes. 7052, that's ordinary share capital. Then we have 10% preference share capital. 10% preference share capital. Do you remember that figure? 10% preference share capital, how much? 1,600. Then we have, in this case here, non-current liabilities. Non-current liabilities. Non-current liabilities. We have 8% debentures. So 8% debentures. Are you able to remind us the figure you got for 8% debentures? 1768. Thank you very much. 1768. And then we got the current liabilities. So current liabilities. So we have trade payables. We have the payables. So payables, are you able to remember the figure? Payables, are you able to remember the figure? Already we have it for payables. 1962, payables, trade payables. 1962, payables, trade payables. 1962. And then we have bank overdraft. Bank overdraft. So for bank overdraft, remember it is 775.8 plus that 30, which gives us how much here, somebody? 805.8. 805.8. And then we have lastly current tax. So tax inakuja ngapi? Tax of 275.1. Tax of 275.1. Tax of 275.1. So could you kindly come and add here and give us the total, equity and liabilities. Total equity and liabilities. What are we getting? Somebody, total equity and liabilities. Oh, it's balancing. It's balancing. So I'm being given a figure of 13,462.9. Remember, for the preference dividends cumulative, we gave them shares. They are somewhere here. We gave them shares, we gave them some things. So you can't bring them here. So according to Mark Z, it's 13,463. Pretty similar. So it has taken me 2 hours to do it. I'm so sure I would have done it much faster. But right now, I'm so sure you guys have gotten some deep understanding of this area. So if you go to an exam this semester, and then you get a question of external reconstruction, where do you think will be the most appropriate area to start from? Yeah, you start from the balance sheet. You do journals. You know, those journals are free marks. Yeah, even if you miss, you'll miss a few things. You do journals, and then you can go back and do those other things of closing the old company. So if I were you, I would do the balance sheet. Do, in this case here, those journals. Of course, whichever journals you can, like journals for recognizing assets. journals for recognizing what your liabilities. The moment I do those two, I've gotten more than, you see, look at this question here. Let me give you a secret. Let me give you a secret how I passed this paper very easily. You see here, statement of financial position, 6 marks. Journal entries to record year 6. I can easily get these 12 marks without knowing what I'm doing. Then I'll come and do, I'll not even do a lot of work in part A, trust you me. Part A, I'll just concentrate with purchase consideration and opening that Zawadi account, right? I'll not do so much, and maybe realization. For part A, realization is because I'm posting most of the things at book value, because I must strive to do everything here in 40 minutes, in 40 minutes maximum. So now that marks the end of this particular session. I'll be posting this question on YouTube. I hope you guys are making comments on that channel, right? I know this makes Sarah G very happy. Sarah G loves my videos. So once you get it there on YouTube and you show number one that you do what here, you subscribe. And please put a comment. Like now, yesterday, I only have 12 comments instead of having 80 comments, right? That YouTube, I'm working to get a good pension. Currently, I'm getting about 40K from it. I should get like 100K every month. If I can get 100K, then that will be a very good pension program for Mwalimu. Great. Naina mambo mengi sana hiyo. And I can only reach there if you guys really support Mwalimu. If you guys support Mwalimu by putting comments there, etc, etc, etc. Great. So any other? Great.